Mr. Sagar Kumar Bisoi, Deputy Manager, Business Development, Energy Private Limited. And the topic he is going to talk about is latest green energy procurement and financial options for SMEs.
Yeah, hi. Good afternoon. So, just some more for the lunchtime, I understand. So, my name is Sagar Bishoy. So, I take care of the business development activities for Enerpark Energy Private Limited. Enerpark Energy Private Limited is a German MNC. So, uh, we are a global brand in Europe and in Middle East and Asia also. So around a portfolio of 4.1 gigawatt with 3,000 megawatts of our own project spread across 25 countries. So just a brief scope, and in India we have started our operations in 2012, around 300 megawatt we have commissioned, targeting about another 500 megawatts by in next couple of year to 3 years in the downline. And we are providing our services to the C&I segment especially. So this is how we are spread it out across the globe. I'll just quickly go through that. So just to give the agenda set, why it is very much crucial for the this market segment or this, because we understand that we are a growing nation, and we know that how is the GDP is growing and what is the contribution of MSMEs or SME sector coming to around. So just beta data, if I go around 45, as in, because at what cost also we are growing is a quite a significant topic to talk about. Like we are growing, and the way at we are also targeting of the sustainability, because the growth we don't want at a cost which we don't want to burden our future generations to come upon. So as per the survey, around 45% is a target of the GDP that has to be considered for the net zero targets, and MSME consuming around 30 to 35, around 35 to 35% of the energy consumption, which needs a huge quantum of electricity being used by them. And it's also in terms of cost that is getting involved for the output of these products, and also involves about how this is going to help. So a lot of things coming to only the Karnataka specific things, like initiatives has been as per the solar policy of 20 to 27, like for on-site if you want to go for anything. So I think various aspects is already covered by Shritam. So net metering, yeah, you are getting availed if you are having a contract demand of less than 2 megawatt or whichever is the lower capacity you can build, and you can bank that energy and you can use it at any perspective time. And net metering benefit is also, the only thing is that with open access you cannot get this, but on a behind the meter application, like you are not allowed to export, but in that conditions both type of energies can be utilized. Coming to the off-site solutions, which are like there is a no physical asset at your site, it will be a virtual power transmitted through the grid. Like any consumer more than 100 kilowatt peak is now eligible to avail this open access power. Monthly banking settlement is allowed. So irrespective of your TODs, you can check what is your consumption pattern, and based on that you can plan your capacities, or that can be you can with distribution companies. Then on the banking charges you need to pay around 2% more. So group captive status, if you want to avail to get rid of the cross subsidy or additional surcharges, which is the open access charges, so you need to infuse around 26% of the equity infusion to become a group captive partner, or your own investment, in anyway it is not at all required. So if you are purely want to go for not involving any type of investment, that is a third party kind of a thing. But as on the viability point of view, is still a question mark because of the delta very, very less with respect to the current tariffs. So this is the policies as on date. So what are the financing models available? Like green loans are now being given by a lot of financial institutes to power this, because I would rather tell how this looks upon, because when we think of any asset that is coming as with how the capex will involve, and capex is a major issue in a startup or MSMEs. So we need to think it from a cash flow perspective, I'd rather say like that. Like models coming up with deferred capex, where you can pay your asset in deferred, like in 5 years terms. So if you, I will give you also, there is a numbers which I'll show you after this. Uh, for example, 10 lakhs is an electricity bill. So if the EMI is coming around 9 lakhs rupees for that asset and you're saving substantial amount of energy, and after 3 years that electricity is free of cost, so why cannot you go? So think from a cash flow perspective rather than a cash, because already you are getting a depreciation benefit to that, and start from the day one you are not allowed, means you are not paying the full amount in. So this green financings, a lot of banks are coming up, especially SIDBI, where we are also having a tie-up with them, helping MSMEs getting this, like 100% of the some cases they provide the loans with very attractive interest rate, which is very, very lower than the other banking financial, but still other banks like SDFC or Tata Capital are providing various lucrative interest rate to MSMEs right now. So also if you don't want to invest, but then you want to have some other purchase like RECs, you can also buy the certificates from any of the developers directly. So this you can avail, and you can get into your ESG platforms also. So next is the offsite solution, which I think Shritam has already briefed, is the PPAs that you'll be signing up with developers like us or anyone, where you can, with some minimal investment, you can get this green energy on a very low rates, and you can make a substantial savings in terms of your operations. Coming to like on-site solutions is like rooftops or those aspects where at premises you can go for, and then just go. I can say that on-site there are various models, like you can go for a direct investment or a deferred capex, as I told you, or like OPEX. OPEX involve normally there will be no investment upfront investment from your end. Is such required, like no maintenance hassle. You can get assured of your current processes and leave it to the developers who is building for you, and you can put full focus on your core operations. Offsite, as I told you, like on-site, then open access, third party, and the virtual PPAs. Virtual PPAs are like kind of agreements where no physical transaction of energy being taken care of, but you will be buying the credits from that. So these are various modes of procuring methodologies, options without any direct capital investment, because capital is what MSMEs need the most at present of time, and how to protect it. Just to give you just a snapshot of the scenarios, how so if you consider a solar or on-site, just a differentiation, if you go up with your own investment on or on a support of any financial institutes. So if you see around 3.8 to 4 crores is what the investment is about, and the returns you can see. So if you go for your own investment, it is around 3.5 years it is coming around, with the accelerated depreciation benefits into the you get, because 40% AD benefit is only in the solar as on date, which is allowed by any GOI on a very highest level as on date. So if you, the same thing, if you go for an 80-20 ratio with any financial, so it is around 5.5 to 6 years max. But the quantum of savings you can see, if you install a 1,000 kilowatt of system at your system, which on an average around 15 lakhs unit will give you. So this is a quantum of savings that can be done, because this money you can also rotate, because this is savings that you get the system, the electricity, which is accounts around 25 to 30% of your operating cost. So there is a good chance of your cost coming down, and also accelerating this funds for your further growth. And why it is also important, because a lot of companies, like all big larger companies, are coming for their 100% ESG goals, and they want their partners to be also be in it. If you are not, so almost like big names, they are not registering. So as being an MSMEs, and we are also knowing our limitations, So we also had to be gear up with those kind of a thing, because it also give you your business potential or your sales pitch, that if you tell a company of XYZ stater of blue chip company that I am having green energy at my premises, your job is almost half done, because getting vendors like that is a big so think from those. One is the cash flow perspective, how this financial cash flow will happen, and also on the business oriented. So this give you two opportunities for and these are the financing scheme available in the markets, or the methodology that is available in the market, which you can think upon and you can do. And I have seen like MSMEs with a tie-up with SIDBI, we have done around 4 to 5, and now after 3 years they are finding very lucrative of the cost coming down, then cutting down the product, becoming the product is becoming very competitive with some of the top players in the market, very equivalent products to that. So this also help it. And if you go for some green energy procurement through PPA models, you comes under the commercial. So this is the segment you can save, annual potential savings you can get without with a very minimal investment. Or if you're a commercial cadre, this is the kind of savings that you can achieve. So this is how the for example, 3 rupees, you are getting 8 rupees as a Bescom tariff, for example, and you have a deal with them at around 3 rupees to 4 rupees on a group captive. If it is a third party, it will be slightly higher. So in that case, the open access charges and the net deficit you are getting is around 2.5. So around 3 rupees 92 paisa on an average you will save if the trend is what we have seen the trend in the last 10 to 15 years. So this is how the potential is available, and it's all cost, and that's how you save a lot of money from the financial perspective, which gives you some. And normally this kind of PPAs give you a longer vision, and your electricity tariff, or that you are a little bit skeptical about it, thinking that okay, this is going to be my cash flow for electricity. There is no sudden surge of increase due to any any discount charges getting up, or so this you are getting insulated, which is a 34. If any business transaction you are insulated for your 30% of your cost going to it, so it's a no-brainer to go very immediate action to secure that 30% and focus on the core technology, because technology is what is required also for your products to get mature. So this is how we thought that I would like to give an insight how this can be leveraged and how this benefit can be passed on. So this is the virtual. So if you don't want to trade anything, there are other methodologies which I have told, like REC purchase. You can buy the certificates from these developers through trade market, or and you can directly show it and convert it into your consumption. For example, 1 megawatt of power you are using, and this RECs you can purchase it. So that also help you in getting some green status or your ESG goals towards the net zero. So just the clientele list, how Enerpark is growing in India, and also helping the diaspora of this community to coming ahead. So this is from my side. Any questions, please? Yeah. In India, we have done around 300 megawatt as on date, and we are already targeting around 500 megawatt in the next couple of years. Globally, we have done around 4.1 gigawatts. 1 gigawatt. Yeah.
Thank you, sir. I think you can give a bigger round of applause to him. Thank you. I would now request Mr. Abhishek Agarwal, co-founder, FinUp Solutions Private Limited, to kindly come here and talk about digital revolution driving force for SMEs growth.
Good afternoon, everyone. Is it audible? There is a saying that never come between people and their lunch, but today I'm put into that. I'll try to make it brief and small. Today the topic which I'm discussing on is digital revolution. And I think since morning, many speakers has emphasized the point on that. So for the sake of repetition, I'll few points I'll just repeat, and otherwise most of the points has been discussed. First of all, let me introduce what FinUp does. So basically, I'm representing a company which is a fintech platform, and we are working for SMEs specifically. I'm very happy and proud to say that in last 1 year, we have helped more than 300 startups and SMEs for providing fundings through various sources. And FinUp works as a debt capital marketplace where SMEs can onboard themselves, and we are connected with 50 plus lenders in India across multiple products, and that can help in the raising funds and capital for SMEs, specifically SMEs who are looking for the growth capital. Now, specifically in digital transformation, if I say in digital revolution, what is the challenges SMEs are facing? We don't act till the time we are compelled to do that. And that's what shows here, that COVID-19 has shown us what we could have done earlier. Many SMEs were not using basic technologies like even email functions or data saving at cloud. Those SMEs during COVID suffered a lot. Second problem comes when we want to bring a change in the organization. People are too busy in their current business, and they are not ready to open and listen to new ideas which can be talked and discussed, or new offers comes to them. As part of FinUp, I spoken to more than 300 entrepreneurs, startups, founders, and what I have seen that the people who have involved the digital journey in their business, able to scale it very fast, able to grow it very fast. Obviously, many SMEs, they work in their own manner. They like to grow in an organic manner, which is fine. But to make it more scalable, automative, or to produce more efficiency, it is better that if the process can be digitized. There are certain myths about the digital transformation or digital involvement in the company. One is that most of us thinks that digital transformation or digital renovation will be very costly affair, it will be very expensive. But today you have seen there are software providers who were providing services at very low cost. We had people from Tally, we had people from Salesforce. Now the CRM or accounting software, or in fact online invoicing software or digital payments, all are all are available at very low cost. Banks are providing many platforms and facilities and interchanging facilities where you can use the facilities. So those myths are those myths needs to be burst. Many times we think that the digital renovation or digital transformation is about for the large corporates only, but it is very much applicable for SMEs. We always think that we are too small for it, but let me tell you that even an organization having 15 to 20 people required some sort of digitization in the business if they want to grow more. And another very important point is the culture and attitude. The attitude that हमारा तो सब सही चल रहा है. I'm doing this business in same way from last 20 years. Now why should I change? I think that should not be the case. The society is changing, the business landscape is changing, and for that matter, it's always good to have a rethinking on digitization of the various processes of the business. Kodak example was talked in the morning. The company suffered a lot because they didn't adopted the change. The same example I can take of the BlackBerry versus iPhone, or there are many cases where we saw that companies suffered due to non-adoptability of the coming technology. And very important part in BlackBerry versus iPhone, if I say, if you are not able to understand what your customer is looking for or what your customer is expecting for, then that will be very difficult, and that will kill the business in long run. why we call startups, many times we call startups and SMEs, what the major difference is that the startups are more ready to digital process. They are, they take, they are having the risk taking ability. They are able to raise funds better because they are open up to the multiple partnerships and multiple options available. So for SMEs, the topic which Salunke have given to me, that how we can make it growth oriented. For growth oriented, it's very important that we look forward for multiple partnerships. We look forward for making our data available. I've seen that even the bigger companies like JSW mentioning the point that where people are not able to find the vendors properly, or people are not able to find the customers properly, or not able to scale beyond a particular geographical region. For that, it is important that we are using the best available tools, whether it's in marketing or it's in production or it's in process. So what counts for the digital transformation is that a rethinking of your entire business. And let me put that word very clearly over here. Digitization is second, your business is first. Nothing comes beyond your business. But you have to, in the digitization, earlier I was sending the letters, now I'm sending emails. That doesn't mean the digitization. I'm using laptops or mobile phone. That doesn't mean digitization. In digitization, I have to rethink the entire business process. What exactly and how I want to grow my business. And in each field of that has to be looked into. Then only you can achieve a true digitization. There may be a chance that you need not to do entire things. You can organically and slowly can grow, adopt one by one a thing, and then you can see that what your business require most. Accordingly, you can go ahead. So that's, I definitely don't want to take much time on that. Anything on the finance side where you are looking for any upgradation on that, FinUp platform is available for that. We onboard the SMEs on the platform. We do the entire financial analysis and provide the ready to consume report where there are many business indicators they can look into. A point was mentioned today also that cash flow is very important in the business. That comes to the idea of profitability versus liquidity. Now, many of us thinks that our business is profitable but facing the cash crunch. Or many of us has money in the bank account and thinking that we are profitable. This problem can be solved. You can make a better decision if you have real-time data available. And the real-time data availability comes with the digitization process, right? The more reliable data comes to you, the faster data comes to you, the better you will be able to make the decision and you will be able to take the right choices for your business. That's our, thank you.
Thank you, sir. I would now request Mr. Nazir Ahmed Maulvi, Assistant Vice President MCX, to kindly come here and talk about volatile commodity price and need of hedging.
Thank you. Hello everyone, I'm Nazir from MCX, and thanks Abhishek for keeping your presentation concise and completing in 15 minutes. I will also not take much of your time. Since morning, we have heard a couple of fellow speakers speaking about risk management. I'm also here to speak on risk management, but my focus area would be on commodity price risk management. We have been reading these stories every now and then in newspapers, like whenever the commodity prices goes up, how does it impact the profitability of the SMEs? But we don't see many SMEs understand why they need to do risk management. So I'm here to briefly explain you why you need to look at commodity price risk management as a survivability of your organization. We know how commodity prices have behaved in past, but it is extremely difficult to predict how they will perform in near future. In India, the government has allowed national commodity exchanges like MCX, NCDX to work, where we have launched commodity contracts. And by hedging in these commodity contracts, you are able to have a streamlined procurement of your commodities. See, when we talk about commodity price risk management, we see there may be various scenarios. Today we are sitting at a price X over here, but tomorrow, for example, if I take an example of aluminium, today aluminum is traded around 200 rupees, but we don't know at what price it would be traded tomorrow. It may be 210, it may be 180. But when you're selling your products to a, say, client, and you have fixed a price of, say, some X amount of rupees, and the product, your raw material price goes up by, say, 10, 20%, where 80% of your entire cost of product is, say, for aluminum. In that case, what happens is like your profitability gets impacted. For covering that risk of commodity, what we have in India is the platform like MCX, where you can do price risk management through hedging. So hedging not only helps you in predicting your prices, but also securing your profits. I have just plotted some volatility numbers over here. I'm sure the data which we have analyzed, most of the SMEs in India are hardly making a profit of, say, 15%. But when we see most of the commodities which are traded on exchanges, annualized volatility can vary anywhere between 20% to up to, say, 40%, 50%, depending upon commodity. So when your profit margins are so narrow, how you can take a risk on commodity price risk? Hence, you need to look at an exchange platform like MCX for hedging your risk. So what are the main key benefit of, say, hedging? The most important, first I'll tell you what is hedging. Hedging is a mechanism where you take an equal and opposite position of your physical underlying. Say, for example, you are a jeweler, you are sitting on a, say, gold or silver stock of 1 or 2 kg. So gold 2 kg can be, say, valued around 1.2 crore rupees. If in a year, gold price goes up or down by, say, 10%, you are exposing yourself to 12 lakh rupees, which is 1.2 crore into 10%, which comes to a 12 lakh rupees. Are you able to make that amount of money in your business so that you are able to cover the risk? I really doubt. Okay. So what hedging does is like, it helps you in locking your price. So for example, in case of traded prices, when you are trading on, say, gold, or for that matter, aluminum, which is traded on exchanges, you are able to see a price which is much transparent, and that price is available for trading to any participant. So for example, be it you be a, say, small jeweler or large jeweler like Joyaluka, okay, whatever is traded on MCX, say, at same price you will also be able to trade. So that's the offer you a transparency in price. When you go to buy, say, for example, raw material which is not traded in exchange, so there you may get, say, several prices from several suppliers, okay. But being an national exchange, the prices are traded on exchange, available to all. Our prices are much more transparent compared to what you would be getting in a physical market. Second important aspect of hedging on MCX is, or say for that matter, any commodity exchange, is like there is no counterparty risk. I'll give you an example of, say, one of the textile mill person who did a forward contract, which is a bilateral contract between him and a cotton supplier. They agreed that the cotton supplier, bale supplier, will give him the cotton for next 6 months at a price of, say, 26,000 rupees per bale. 2 years back, the cotton prices went up from 25,000 to 40,000 rupees. What happened is that a trader who promised him to supply the cotton bales for 6 months defaulted. Okay, though he did a bilateral contract, he hedged his risk. However, the counterparty defaulted and he suffered a loss. When you trade on exchange, a commodity exchange like us, your counterparty is our clearing corporation. So there is no chances of default. Irrespective of the commodity pricing going from, say, 100 to 200, 300, or falling to 50 rupees, there will not be a default, because all this thing happens on a regulated entity which is governed by SEBI, and we have a clearing corporation who guarantees every trade. So that's another important reason of you hedging on an exchange like us. Then we also have, like, say, when you hedge, you don't have to pay entire money. Say, for example, if you want to get into a bilateral trade with any of your, say, supplier, there you may need to pay a full amount for buying a goods. Okay, then it will lie in your warehouse or vault. There you are incurring entire capital cost. However, when you are hedging a commodity price risk on an exchange, you just pay a margin, which is hardly 10% depending upon commodity. So with a small cost, you are able to manage your price risk much more efficiently. Then you have a facility of say, delivery as well. Say for example, if you are hedged yourself on a commodities which are traded like say copper, aluminium, lead, nickel, zinc. We also trade steel rebar. We trade gold, silver, turmeric, crude palm oil, sunflower oil. These are the commodities which are traded, which you can just pay a small amount and you can lock. If you wish that you want to take a delivery and use it in your manufacturing process, that facility is also available. And if you don't wish to take the delivery, then you can just cash settle this contract or roll over to next expiry, and you can still say have a benefit of say hedging and price risk management. So by way of hedging, you are because you are locking a price, you are in a much better position to predict your cash flow. Once your profit margin are fixed, so you are in a better position to plan your future expansion. So you don't need to worry about how this market will behave and what impact it will have on your profitability. So then now the government also recognize hedging as a business activity. So it is when you are incurring a loss in hedging, so you can carry forward that loss for a couple of years, just like say you do in your normal business activity. So there's additional benefit of hedging on recognized exchange like MCX. So which are the commodities traded on MCX? We have several commodities, which some of them are listed over here. I met a colleague over here who are into business of plastic. So they may see, okay, the plastic is not traded on exchanges in India. So how do they hedge? So for them, they can do, what they do is like a surrogate hedging. What is surrogate hedging? Plastic is derived from energy, which is made from crude oil. So that entity who are using plastic in their manufacturing process can use crude oil contract for hedging their price risk. Then there may be some people who may be using multiple metals. Okay, for them, hedging in different metals may not be that lucrative. So they can look at hedging in say base metal index, which is also traded on Indian exchanges. So now we have just thought or discussed upon like why you need to hedge. I'll just show you a short video clip specially made for the session on how the hedging is done. I'll just request somebody to play over there. Oh, sorry. In this session, I am not able to explain you in nitty-gritty of how the hedging is done, but on our website and on SEBI website, there is host of information on how do you do hedging, how you can understand the commodity market prices better. So there is host of information which you can just log on to these websites and have a look at it. And I'll just request somebody to play this video.
Such large export orders don't come by easily, sir.
Shukla ji, last year the prices of raw material were quite volatile. I don't know what will happen this time.
Oh, sir. This order is for 3 months later. Don't worry so much. But yes, we have to inform the client soon. Otherwise, we might lose the order.
I'm ready to finalize the order. But for the right profits, we first need to decide at what price to purchase the raw materials. If I buy in advance, there is a risk of prices falling. And if I buy during the order processing, there is a risk of prices rising. I don't know what to do. Please suggest something, Mr. CFO.
Price fluctuations keep happening. When commodity prices rise in the country, goods become more expensive for consumers. And when prices fall, farmers are affected. To avoid this, you should hedge your raw material exposure in the commodity derivatives market.
What are the benefits of commodity hedging?
There are many benefits. In the exchange, we can see the price of our raw materials in advance. We can determine the price for our commodities 3 months from now on the exchange. Not just that, we can also take delivery of it. Then, whether prices rise or fall in the spot market later, we don't have to worry.
Now my concerns about raw material prices have been addressed. And this will make our business even stronger.
Yes, and one more thing, we can set off the gains and losses from hedging against our business profits and losses.
This is indeed a very beneficial deal. We are already making in India. And now with the hedge in India, we will have price in India and trade in India. Mr. CFO, please hedge the contract for 3 months. And Shuklaji, confirm this order please.
If you really want to make your business stronger and more stable, please keep hedging your commodity risk on the exchange and don't forget it.
Thank you. So if you want to have a better understanding how hedging can be done, please get in touch with us. I'll make sure like somebody from my team will come and sit with you, understand your business, and advise you how the hedging can be done. Thank you.
Do you have any questions, anyone? No questions? Okay. So I would now request Mr. Hiten Mistry, Vice President, Capwise Financial Services Private Limited, and he is going to talk about transaction advisory, debt, private equity, and M&A.
Thank you. So my topic is not as technical as we have been hearing since morning. Very simple topic, but I thought that I should cover because it plays a very significant role in entire SME domain. As an investment banker, I met many SME companies or many SME entrepreneurs in my career. Fortunately, they are completely aware what they want to do, what they want to improvise in backward integration or a forward integration. But 90% of the time I hear that, we are barely managing our working capital. So we won't be able to take this software for the backward integration, or sometimes they feel like we are paying more for our supply chain, etc. So we as a Capwise and an investment banker, we provide them solution that, we can definitely help you in raising funds. We can definitely help you in providing that kind of ecosystem, which can, elevate you in these things where, so fundraising happens via two things, very easy debt. They can simply go to any debt banks and they can raise funds. So I'm not covering that part. I felt that, they are not much aware about how the private equity functions in SME or how merger acquisition functions in SME domain. So I thought that I'll explain you what the difference in what exactly the private equity and what exactly merger acquisition, what are the advantages and disadvantages. I'll very, very quickly cover this. So I'm going to cover what is private equity. I'll directly jump what is private equity. Private equity is institutional investor where you simply give away a minority share of your company and they'll assist you with the only finance, not much of the synergies. So the companies sometimes feel that, they created good ecosystem, but they are lacking in capital. And capital, sort of those kind of capital, which bank also doesn't provide. If they want to do a branding, if they want to do a marketing, bank doesn't provide to deploy funds in this particular domain. So in that case, we get them a private equity on board, where private equity will give you, finance them, and they can deploy their funds into marketing, branding, sort of buying any software or technical things, basically. Disadvantages or advantages would be like, disadvantages are sometimes private equity comes on board and they always focus on growth or a revenue. They doesn't much focus on EBITDA at times, not always. So that is there, they always focus on growth and do a lot of expenses towards the marketing or a branding, etc. So people end up having a lot of losses. This we have seen in many of the cases. So that are main disadvantages. Sometimes misalignment in the thought process. And thirdly, they have a very exit pressure, like after 3 years or 4 years, they have to take exit. So that's the pressure, and at the third year or end of the third year or fourth year, they don't have any secondary capital available in the market. So that's the maybe disadvantages of private equity on board. In that case, we generally suggest about merger and acquisitions. Merger and acquisitions where any large similar domain company comes and take a majority stake. As a Capwise, we have done 29 merger and acquisitions. Earn-out model, in a very simple layman language, I'll tell you what earn-out model is. Any large SME company is there, similar companies or a similar kind of a companies who has built like 5,000 crore, 10,000 crore business, they will take a majority stake in any SME companies. They will work together for 5 years, 6 years. The SME company will have 49% stake still. elevate themselves by utilizing their ecosystem, which the larger company has already made. So that's where we suggest merger and acquisition. Uh, as I told you, advantages are SME company will have capital access first. Secondly, they will have any new geography. Thirdly, they can start any new product diversification can happen. So these are the advantages, but at the same time, SME companies are running by family, run third generation, fourth generation. That they feel that they will not want to divest 51%, or they will always feel that like we have created this legacy and we don't want to leave this legacy. So that's the major disadvantages of merger and acquisition, where larger company will always take a majority stake in the company. So that's there. Financial risk is also there in merger and acquisition. Once they take a majority stake, that time company might be doing really great, the buyer, but eventually buyer will not have that kind of capital to give exit to the SME companies at 49%. So that may be a challenge. So I thought that I should cover this. What private equity can bring value, what are the advantages, disadvantages, what merger acquisitions disadvantages or advantages. So this is a thing I thought that we can definitely connect offline, because I have many things to say, like what private equity can bring, what Capwise can bring, add value as a iBanker by bringing any private equity on board, or getting any strong strategic partner on board. So we can discuss offline. If you have any question, you can ask now also, or we can take the question offline. Like how, as a iBanker, we can add value to SME companies.
Give him a great round of applause. He's completed a little ahead of time. Well, let me just tell you, in case you have any more questions, if you haven't asked in the session, they have the stalls around, like we see, they have the stalls around. So please ensure that, after your after your lunch, you can just probably go and have a look and even ask them the questions if you have any. So I would also request Mr. Rajesh Bhagat, India Consultant, Hong Kong Trade Development Council, to kindly come here and talk about emerging trade and investment opportunities via Hong Kong.
Good afternoon. I think I'm the last person standing in between you and the lunch. So please bear with me. Oh. Yeah, almost the last person. So basically, I'll just talk to you a little about Hong Kong advantages and how Hong Kong Trade Development Council can help SMEs to explore international markets through Hong Kong. So I'll quickly brief you about the Hong Kong advantages. For all those who have been to Hong Kong will agree that Hong Kong can best be described as Asia's central business district. It actually promotes two-way trade, both import and export of goods and services. Hong Kong basically has adopted the same common law system that we have adopted by the British over here. And there is a very strong protection of contracts and IP. In fact, there's an international arbitration center where the arbitral awards can be even enforced in the China mainland. It also has adopted the world's first independent commission against corruption. So there's a very strong anti-corruption law over there. It has a very simple tax structure. In fact, there is no VAT, no GST, no sales tax, no custom duty. In fact, even the salary tax is capped at only 15%, and for profit tax 16.5%. For that also profits, that also for income exceeding 2 million Hong Kong dollars. So if it's less than 2 million Hong Kong dollars, it is 7.5% for salary and 8.25% for profit tax. Even if you see the strategic position of Hong Kong, within 4 hours you can actually access most of the key cities in Asia and half the world's population within 5 hours. We all know Hong Kong is a very strong international financial center. In fact, it ranks 4th after New York, London, Singapore. We talk about Hong Kong. It is a very strong stock market and a very strong IPO center and a forex market. Even as a logistic, aviation, and a maritime service hub, it has a deep sea port. As I mentioned earlier, there is no custom duty. It's a very strong logistics center in terms of cargo as well as container port. Even as a trading hub, it stands at 10th in the world for merchandise trade and 23rd in the world for commercial services. So I'll quickly talk to you about Hong Kong Trade Development Council. We are set up in 1966 by ordinance to promote international trade through Hong Kong. So when I talk about through Hong Kong, I mean that you don't have to do business with Hong Kong, because Hong Kong, basically the population is just over 7 million people. So not that it's still a very big market, but using Hong Kong, you can actually reach out to international markets, because being an international gateway, people, buyers and suppliers from all parts of the world converge to Hong Kong, and probably you are able to access a buyer in, say, in Australia or even in Japan or even in Middle East using Hong Kong as a platform. So we promote all these international gateway through various forums, summits, as well as through our exhibitions. And we have adopted something what we call an exhibition plus model, where it is a physical exhibition. Then we have, of course, the virtual platform and a sourcing platform. HKTDC, we have actually been pioneers in organizing exhibitions across various verticals and various categories. And we organize over 35 trade shows and conferences in Hong Kong. In 2019, before the pandemic, we had almost 40,000 exhibitors coming to our platforms and over 800,000 buyers from all over the world that come to our platforms to source products. So as you can see, we are 5 of the largest marketplaces are organized by us, and 10 of Asia's largest exhibitions are organized in Hong Kong. So it's not only the exhibitions, but because we have different offices all over the world, through our offices we even organize buying missions and networking events, and we invite buyers from all over the world. We have group pavilions. In fact, many of our export promotion councils, they organize Indian participation, Indian pavilion in our trade fairs. So as you can see, the food expo, the tea fair, we have got many Indian exhibitors from the Gem and Jewelry Export Promotion Council. Then we have the IGF, that is the the Gift and Handicraft Fair, that is the EPCH fair, that is organized. They organize the houseware fair as well as the home textile fair in our trade show. So we have this model, which is what I mentioned, the exhibition plus model. That is where we have the physical trade shows. Then we have the click to match, which is the virtual model, whereby we are actually embed the artificial intelligence. So you don't have to actually search for buyers and suppliers. You are already given, leads by using your own profile. They actually help you to beat potential buyers and suppliers using the artificial intelligence embedded platform. And then we have the sourcing platform, hktdc.com sourcing, whereby sitting right over here, you can download our app and you can source buyers and suppliers from any part of the world. So besides our trade platforms and exhibition plus model, we also nurture a lot of startups. I think we have been talking about startups over here. And we do that through our trade shows. Some of our trade shows like electronics fair, gifts fair, we actually help these startups to either access market access or to actually be potential investors. Then we have various events where we have, where you can do mentoring, you can have product pitches, and we have a entrepreneur day where we help these startups to meet, potential investors and find potential markets for them. And we also have a Startup Express where we invite startups from different parts of the world to take part in our pitching sessions and also showcase their products and win prizes in Hong Kong. So besides that, we also organize large conferences and summits. And one which just got over last week is the Asian Financial Forum. Here, we have most of the speakers that come to our forum are either representatives of large corporate financial institutions or heads of financial ministries. And we had from India, we had Raghuram Rajan who had been there. We had Mr. Narayan Murthy. And basically, this forum is a conglomerate of all financial investors, private equity players, as well as we organize deal flow sessions over here where we match project owners with project investors. And in this last week's session, we had over 3,600 delegates, and we organized 700 meetings for them. Another very important conference that we organize is the Asian Logistic, Maritime and Aviation Conference. And in this conference, it's a very good networking platform for people who are in the logistics space. But it's not only networking within the logistics space, but at least you can also find potential customers in this very important conference. As I mentioned earlier, we are a global organization. We have 50 offices world over. In India, I look after South Asia. So, the entire Sri Lanka, Bangladesh, Nepal, India is under my jurisdiction. And we are based both in Mumbai and Delhi. So I will be happy to interact with you even through email or through my, I keep coming to Bangalore also quite often. And these are my coordinates, so would be happy to take any questions if you have. Thank you very much.
So ladies and gentlemen, any questions for him? I think that was very interesting. So give him a great round of applause. Thank you, sir. So now I would like to call our last speaker for the day, Mr. Vardhan TR, Managing Director, Mascot Systems Private Limited, and he would be talking about business growth strategies. Welcome, sir.
Mine have gone by. Hi. A little different from the rest of the guys who made presentations this morning and afternoon. I don't have a PowerPoint presentation. My apologies. Right through the morning and a portion of the afternoon session, I guess every single person used a PowerPoint presentation. My apologies. I don't have a PowerPoint presentation. I'm pretty poor at it. I'm from the old schools of thought. Right? Straight? Okay. I'm from the old school of thoughts. Any guesses? Okay, I like an interactive session. All that who can come up with questions that I ask you, if you can come up with answers, I'm good with that. Are you good with that? Yeah. What do you think we're doing from morning, starting 10 through to 2:30 right now? What is the theme that you believe we are working on? Anybody to say that? No answers? Information, you? Growth for SMEs. Or is this just growth for SMEs or growth across? More often than not, we watch the TV, we watch a lot of news. We have our Prime Minister speaking a lot of things. He says, oh, we are at 3.8 trillion, we've got to be growing at 5 to 5. And then somebody talking about it, by 2030, we're going to be making it a 7 trillion economy, right? Who's going to participate? Well, if you realize one thing, in the morning, Tammy mentioned that the SMEs contribute close to 65% of their economy. Where are we? We are contributing just 30. We have ways to go to ensure we even grow a little higher. Now, if you're doing a 35% of our, 30% of the economy of the country, we're doing approximately 1.25 trillion, right? Now, if we want to grow, we are going to grow to 7 trillion by 2030. even at the same 30% growth, we would probably reach where? We would reach closer to 2 trillion economy. Why can't we up that up from 30 to 32 to 35 to 37 and probably reach 40%? Is it possible? Yes, it is. Now, what do you think we need to do to ensure we're able to reach that kind of levels? Now, let's look at what happened this morning. We had Chandrakant speaking something. Then we have Sharmita, I think it was Sharmila or Sharmita who spoke something. Ms. Bhattacharya who spoke something else. And then Sanjeev spoke something more. Let's take that on. Chandrakant was talking about how SME the chamber can support each of you in terms of business loans, many other things that he can get. He can ensure he gets people together to speak to you. That's what he's done today. What did Ms. Bhattacharya say? She spoke about collaborating with the SME chamber to support the SMEs. For what? For one, the hardware, the laptops possibly the software too, which she could help you with all of us. Then what did Sanjeev say? Sanjeev says he's got a path. Use my bridge. You can do a lot for Karnataka so that you can grow yourselves. The second half of the session, we had various speakers speaking around. What were they suggesting? If you notice, they made a pitch across how they can support us. Yes, it's true. But did you all realize one thing? While they are supporting us, each of them are growing. That's a strategy. In the strategy, it's a win-win for both. The SMEs gain, they also grow. So it's only a strategy how we need to work out. Now tell me one thing. How many of you work on gross margins? How many of you work on contributions? Quick. You understand a gross margin and contribution? How many of you work on gross margins? Can I have hands up, please? So can I firmly believe the rest of you work on contributions? Or you also work on gross margins? Okay. I believe there is a little query between gross margins and what it means. Gross margins is whatever is your cost price, the margins that you keep and sell it at that price, that's the margin that you have between the selling price and the cost price. Correct? So I would believe most of you work on gross margins here. Let's switch it on a little bit and start working on contributions. That's nothing different from the gross margins. Gross margins is your buying price is at 100 and selling price, say, a 50% margin is 50. But if you're going to be working on contributions, your selling price would be 100, and then you start working what your buying price would be, which would mean you would be working more towards what you're buying at lower costs to increase your margins. Rather than increasing your selling prices, you're reducing your buying prices. A strategy which helps you in lowering your market, your basic price. Now, for us to achieve the growth, we could adopt many strategies. One of them, market penetration. You have a product which you can penetrate more areas, more people. You can sell to more people. Diversification. You can diversify from A to another product. Correct? Further, we talked of market penetration, market diversification. Then we can talk of more aspects like reaching out to more people. Now, for example, if you are selling a particular product to a customer alpha, you can actually reach out to another person in beta as to how you can actually take it out from there. Oh, sure. Not a problem. No problem. Carry on. Yeah. The next point I would bring on for growth aspect is the market, the product development. If you notice, more often than not, every single year we have new models of cars coming up. We have new mobile phones coming up. This year you have an iPhone 13. The next year he has a new model, the iPhone 14. And the following year he has an iPhone 15. What is he doing? He's trying to ensure he does some more innovations over his existing product, so more people are able to use that. Anything new what we see in the market, we tend to go and buy it. So by your doing these innovations and adding more value to that, your market increases. The third important point for you, for which you can have a strategy by which you can grow, is the fact, say for example, you are working with a customer for a particular product. What more additions can you give him? If you're able to give him additional products which he needs, you can actually ensure that you're able to grow alongside. Now in today's world, what's happening is hiring more people is becoming more difficult. The demography is available, but you don't want to hire more people. So what can you do there? You can draw out a strategy by which you can collaborate with a micro industry, a smaller partner alongside. He's able to grow alongside. And what happens is you ensure you have subcontracts there. Maybe you can have a small little investment in that. In nutshell, what I suggest is as you move forward, the strategies you may need to adopt could be multifold. One, market penetration, market diversification, innovation, and development. With that, I'll sign off. If you have any questions, you can shoot.
Any question? Where is Miss Annie? Any, you want to say something, anything? Any question for the panelist? No? All are hungry? Anyway, after lunch, we will be meeting again. Those are, interested to have a, dialogue with each other, particularly to present your business idea, business skill, or any other business activity. You are welcome to discuss from the dais. Okay? Thank you very much for especially all the speakers and especially for all of you, because time is money and time is important, and we try to accommodate the 3 sessions before lunch, because most of the people are coming from the out of Bangalore and they want to go back, so that we have decided to squeeze the sessions. But nevertheless, all speakers spoke very well, very interesting, very important, and I'm sorry for the the glitch with this technology, and hope that next time we will improve that technological development, and you also change your machines and equipments. Okay, so because of you, all speakers have become restless. So thank you very much. I request Sakshi Kulkarni to present your gift. Thank you. All the give a big hand to the speakers. Yes, please.
Hello.
You want to say something?
I just request, now that it's already late, we will not be having any time to interact with our people. If you can share the email IDs, if not the mobile numbers of all.
Okay, we'll share.
The
members will get the details.
Yeah,
okay?
that would be nice.
Thank you.
Okay, thank you.